Hello everyone, George DeSantis here with the look at the market for the week ending August 12th, 2016. As I usually do, let me just read a disclaimer before we get into the charts. Trading and investing has large potential rewards and large potential risks. This video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. So consult a licensed professional investment advisor for investment advice. Let's take a look at the charts, beginning with a monthly chart of the S&P 500. Here's the chart of the S&P 500, the monthly chart, and it's a long-term chart, so not much changes very rapidly on it. It's like that long, large battleship that takes a while to turn. However, we should just note that the Kalman filter has been trending up from above the instantaneous trend line, which indicates that the longer term trend is up. We are now closing we continue to close pretty close to the high of the bar. The parabolic yellow dot here is way below the most recent bar, this month's bar. So there is no indication to reverse that trend, that uptrend. MACD histogram just turned positive. It's now very slightly positive, 0.02, which means it's just now above the zero line. And that's it was continuing to trend up from below the zero line, and now it's above it. So the bulls continue to be in charge. At the bottom of the chart, LFORS, the 13-month average of the LFORS index, is continuing to remain above the zero line, so the bulls are in charge. Once again, we can see that the bulls are in charge. Let's take a look at the weekly chart. Okay, here's the weekly chart of the S&P 500 that we often look at. The Kalman filter remains above the instantaneous trend line, indicating that the trend remains up. It's been so since it began trending up here and crossed above the instantaneous trend line at the end of February. Trend is up. However, if we look to the right edge of the chart, we can see that we have some small bodied candles here, which indicate some uncertainty, maybe a topping, maybe we get a pullback, perhaps we get a pullback to closer to consensus of value, which would be closer to the instantaneous trend line, as we did here. So that's a real possibility still. The parabolic is still below the most recent bar, last week's bar. RSI 12, a very strong weekly trend indicator, is still above the 60% line. MACD continues to trend up above the zero line. And percent R indicates that momentum is still very strong. We can see it here way above the 80% line. So the monthly chart looks still very bullish, and the weekly chart is still very bullish, with perhaps the possibility of a retracement to what Alex would call more consensus of value, closer to the instantaneous trend line, because it's, as you can see, it moved pretty far away from it, and when that happens, it tends to pull back. Let's take a look at the daily chart. Here's a daily chart, one of those that we look at of the S&P 500. Notice that back here, back in at the beginning of July, back here in the beginning of July, we calculated the target of 2199, call it 2200, for the S&P, based on this symmetrical triangle that we had here. Well, we came pretty close to that. We're now closing at 2184 and a fraction. So we're pretty close to hitting that target of 2200. Right now we can see that the 9 EMA, 9 exponential moving average, the yellow line, remains above the 30 weighted moving average, the blue line. The parabolic is still below the most recent bars we saw on the weekly chart. So the trend is up. And we do seem to be in another bit of a trading range here. And so we have to wait to see if we get some kind of a correction here before we get any more bullish on this chart. RSI 12 remains above the 60% line, and Williams pro buying indicator is above the zero line, so we still have a significant amount of buying in the market, and the percent R remains above the 80% line. So this chart is also looking pretty bullish, except for the fact that we might be in a bit of a trading range here, but that could simply mean a continuation pattern, a bullish continuation pattern. So we wait to see if we move above this now, if we check out and move above it, or if we get some bit of a correction here. But all in all three major time frames, the monthly, the weekly, and the daily time frames, are in bullish territory. Let's take a look at something else. Here's a weekly chart of the NASDAQ composite. And as we can see here, the NASDAQ, the Kalman filter, broke above the instantaneous trend line, tested it twice as we discussed last week. We had a bullish engulfing candle here, and it was off to the races. We had a pretty parabolic move here. So it wouldn't be surprising to see the market stalling at this level for a while to get that regression to the mean that often occurs, and we shouldn't be surprised at that at all. But in general, this weekly chart is still very bullish. Parabolic is below the most recent bar. RSI 12 is really showing a lot of strength here in bullish territory, and the NASDAQ, the MACD histogram is trending up nicely above the zero line. It's in new high territory here. So as far as the weekly chart of the NASDAQ is concerned, and as I mentioned before, many people believe that NASDAQ leads the rest of the market. It is still very bullish, but it's had this very parabolic move, and therefore we shouldn't be surprised to see some bit of a pullback. So let's take a look at the daily chart of the NASDAQ. And here's the daily chart of the NASDAQ composite. At the top of the chart here, we can see Kalman filter crossed above the instantaneous trend line, continues to trend up above the instantaneous trend line. The parabolic yellow dot is hidden here on the instantaneous trend line, but it's still below the most recent bar. We can see that bit of a consolidation pattern here. It's a bullish consolidation pattern. We may see a little bit of a retracement, but nothing significant. In the middle of the chart, MACD continues to trend down. However, there is no real divergence, no bearish divergence on MACD. So it's not unusual to see MACD trending down, even though there is no divergence, and the trend continues to remain up. At the bottom of the chart here, Jerry Appel's sum of the rate of change indicator is still above the 4% line, and therefore I'm not selling the Qs at this time, because the sell signal is when it crosses below the 4% line. I mean, we might see that pretty soon, but not at this time. It's not here, so we'll keep the Qs. So the NASDAQ, the daily chart, riding the upper Bollinger line here, and perhaps going into a bit of a trading range or bullish consolidation pattern. Let's take a look at something else. Here's a weekly chart of the S&P that I have plotted the CCI, the Commodity Channel Index, on, and I use this to trade SSO, the S&P leverage index, leverage ETF. It crossed above the zero line here back at the end of February, and since then it's been above it. So it hasn't really even crossed below the 100% line, so I'm holding SSO. If it crosses below the 100% line, I might begin to lighten up on it, so maybe sell half what I own. But unless it it crosses below 0, I'm still holding SSO. So that's the only indication on this chart that I wanted to point out. Here's a daily chart of the S&P 500 with the VIX index, the volatility index. It's very low. It's at 11.55, and that's pretty low historically. However, as Laszlo Birini and his outfit determined by their research, VIX is not a leading indicator. It doesn't tell us much about where the market is headed, except as I have found that when VIX is at very high levels, like it was here and here and here again, it is one of the best times to be looking to buy the market. Okay, so apart from that, I don't find VIX very useful. Let's take a look at something else. And here's a chart from Stock Charts showing us the S&P 500, S&P 100, I'm sorry, the percentage of those stocks above the 200-day moving average. So we can see that it's 88% of the S&P 100 above the 200-day moving average. So that's pretty bullish. Here's a weekly chart of the S&P 500 from stockcharts.com with the impulse bars, red, green, and blue. Here's what I'm thinking. The weekly chart has a blue bar as of last week, of course. That blue bar tells us that we can go either long or short. The thing is that every time we get one of these blue bars after a nice uptrend like that, the market seems to pull back to between the 9 and the 30 the 9 EMA and the 30 weighted moving average, the green line, red line. And that's the consensus of value. Check it out. All the way here, here, here. Every time we get too far away from consensus of value, as Alex calls it, we get a pullback. It is likely that we're going to get a pullback here. Market has had a tremendous run up, and that's my thinking. We're going to find a bit of a pullback. We are seeing it also on the daily chart. So that's what I'm thinking. Have a nice weekend. I'm continuing to enjoy the Olympics. Love it. And we'll talk to you again next week. I'll send you an email with a couple of stocks that have green bars on both weekly and monthly charts, which a couple of them I already own. So have a good weekend. Bye-bye.